he's not getting all of that in a sandwich. In a sandwich, is he still depreciating this property if it's an investment, which it is?
Yes, he's untitled.
Yesterday, we did that call for Janice. It's posted. Did everybody hear that? The guy's name was Victorian?
Okay.
No one?
Yeah, I heard it.
You heard it? Okay. So from that call, we said we would get him the numbers. The numbers are real simple for an AO. So I want you to ask me, because then we'll get deeper into other types of deals. The challenge is, Janice found out this morning. How'd you find out about the auction, Janice?
I actually knew when I called him, and then I didn't bring it out till the very end because he didn't bring it up. He tried to hide it, and he still hid it to the very end.
Yeah, I knew he was in arrears, and I told the people in my office I didn't bring that up because I think it would have put him on the defense. I didn't need to.
Yeah.
He knows where he is. I didn't know it was going to auction. This guy's going to auction at the end of June, and he was playing hardball with us. So I know one guy in our community. He does not want to be referred. But I said I can refer all associates to. He's like, it's a pain. Then you know what, Chris? I don't want to do it. But we have one-offs where we got to stop an auction. He's the only guy I ever met in 34 years and knows how to do it the right way, and the right way for the seller. So you can reach out to him on Slack, Janice, and if he doesn't answer, not on much, I can get him by cell, okay?
Okay. Thank you.
Well, I would get this to this guy, and then I would offer him that door.
Okay.
Okay? All right. This guy was on for 1-1. What I'm going to show you guys is exactly what I would sketch out for a seller in first. He's on for 1-1. You'll hear in the call, and those of you that heard it, no matter what I did, he wasn't going with another method. So I pivoted at the end to this logically instead of letting him go. And I almost forgot because I was in my office and you guys were watching. I'm like, I almost jumped off the phone, giving up on the guy. And then I went to AO. Here's what Janice can send him. So Janice, you're just going to send us to him in an email, okay? You're going to say, I don't know yet, but I'm giving you a hypothetical. And our paperwork says this is just a hypothetical. But I'm going to go on for, say, Rick, what would you say? 1.2? 1.2. I'm going to use that. I would have went a touch higher probably, but let's use that and see how it comes out. We're just going to do it live with you. I'm going to go on for 1.2, Victoria. I'm going to look to get a $200,000 deposit from the buyer, whether it's up front or over time. You're not buying, in most markets, a $1 million home without 20%, right? Everybody agree with that? Okay. So, Victorian, and you'll write these out, what I'm saying, at financing time, the buyer's going to owe you $1 million. But we already got 200, which we split on a K each. So I got you to your 1.1, basically. Everybody follow that?
Mm-hmm.
Now, Janice might get a little less, might get a little more. This is just an example, so he, in this case, understands how this thing floats.
The one thing that I'll always add is, just so they're aware, the minimum they'll get is their asking price. So anything that our portion of the split is capped at that markup.
Okay, good point. So if he came, does everybody understand this basic piece of an AO? Because these are just one payday. It should be, I want to make sure it's cut and dry in your heads. Is everybody good? Okay. Let's change it then. To Rick's point. Let's say that not uncommon for a buyer at this price range to say, okay, they go to the buyer meeting with you and Nick, and with Nick's checklist, they get up to $300,000 over time. Right? So that would mean if we didn't cap it, to Rick's point, let's see where this comes out, and we each took 150, this person's going to be owed at, the seller is going to be owed at closing 900, right? And he only got 150. So he's 50 grand shy of the 1.1. Follow me? I want to make sure.
Yeah.
Okay. So you either don't, if they don't ask about cap, I don't bring it up. But if they ask about cap, you can do what Rick said. Look, I'll make sure you get your minimum no matter what. So if this goes too high, you're still going to get your 1.1, in which case I can't take the 150, right? If they're going to get the one, if they're owed 9 and they need 1.1, then they need 200 out of that 300 to be in their pocket. You guys follow that?
Yeah.
So I only can take 100 if they bring it up. Because this is just a hypothetical. You don't know. And I say to him, I don't know what I'm going to get you. Zoom makes sense, you guys? Okay. Yell if it doesn't, please. I do have Julius here. I have to write him an email.
Yeah, I have to ask him for his email.
Right, but you get the numbers.
Oh, yes. My other question is AO the best structure for him? I guess, is he even in the position to ask for 200 versus losing his house altogether?
No, because of his situation, I said to you in Slack, I would ask him, what is your plan? You get 900 grand in equity to protect. Did you have a plan to save this from the auction? If not, I might have one of my...
He says he does. That's why he was quite arrogant, like few that I've come across where they're like a hurt animal. They're like, I can deal with this. I don't need you.
Right, but you didn't point blank ask him about the auction, right?
No.
Right, you got to ask him. Now's the come to Jesus. What are you doing?
Yeah. Because if he had wanted to save it, he would have saved it. It's been at least a few good months from early pre-foreclosure to now.
I agree. I'm just leaving that door in case the auction's on public still, but it's been canceled,
I see. Okay.
I don't know. So you might as well ask, but let's find out. You got to be blunt with him because he's either going to say, get lost. Yeah, I need your contact. And I'll call Kevin if I or you can.
Okay.
Kevin saved a $1.1 million house in Florida about 2 months ago. We put it out as a deal structure. So you guys may have seen it. This woman only owed I think it was 100 or something. She was going to lose all her money. He not only saved it, he morally and ethically said, I can't buy it and take all that equity. So he took a 40% stake in the property and saved it. And the woman was in tears because of it. Because he could have, most investors were trying to steal it from her. She was an elderly lady. And some weird thing that the mortgage didn't get paid. So Kevin's good. He'll do the right thing as long as you get him in time.
So Chris, on that, isn't it, once it goes to auction, obviously people are going to buy it for much less than it's valued at, most likely, if they can't see the home. But I saw something recently, it could be wrong, but I'm pretty sure, let's say they bought it on 70 cents on the dollar, and then they pay all the attorney fees, all the foreclosure costs, everything gets paid out, as well as the mortgage. Everything left over, the original homeowner can file with the state and collect it back. I think a lot of people don't know that. But right, they can do that, right? They can still get some of their equity back.
That is correct. And there's also, talk about niches in real estate, there's a guy I had in my podcast, that's all he does is go after those funds that people don't think they have.
Right. Yeah, I just heard of
Well,
one.
you said they don't claim it. They think, they leave their house and they think they're toast. Yeah. Mm-hmm. Yep.
But I do have a quick question, just really brief. That example you have written up on the board, and that's okay. So they could come with $300,000 down payment, or a buyer might come with $200,000 down payment. When you're writing the offer, usually I just show 10% down, and then I say we split it. But do you ever use any language to kind of show we don't really know what they're going to come with as a down payment? I don't know.
You're right on all fronts. The only thing is if the house price less whatever down payment is going to be a jumbo loan, I use 20% because I need that for a jumbo loan.
Okay.
So whether it's up front or by the time they're financing, we don't want to set buyers up to fail. Some buyers don't know that because they see the ads and they can put 3% down or 10. But the fact is most jumbos are going to need, unless it's a special program at that time. Okay, 20. But in Jeff, I'm talking generalities. And sometimes you guys, you'll put the AO training videos will show you this. You'll put the AO on one side of the piece of paper. I literally just scratch it out for the seller. And on the second side, you'd put a sandwich lease if they're still open to option. And you'll say, I'm in the middle of this one. I'm not in this one, but here are the different, you'll get more money here, Mr. Seller. And they appreciate you being honest because if they're open to both and you're showing them both, they know that you're making less on that AO. But if they're a landlord or a builder like Judy had a builder yesterday, we talked to live in my office, investor builder, there's no reason for us to be in the middle of that. He knows how to do it. So it was the right thing.
How much up of this deal?
Sure, I can wing one. So the seller there so that was the AO. Let's try a sandwich. Just use the numbers. What's going on? 1.1 and 320. Do we know the payment on the mortgage? Yeah, about $3,000. Did you just put that, or did he tell you that?
He told me that.
Okay. Okay, so with the AO, let's use $5,000 rental. He thinks it's like 5 to 7, which is probably right. So for the AO, he got that cash up front, and then let's use $5,000. Let's just be conservative per month. Because Janice is out, right? If he's AO. If it's a sandwich lease, someone say something or no? Is that a bird? Was it a sneeze? Because I tell you, well, this is serious. Nothing to sneeze at. Is that Laura? All right, $3,000 he's paying out, right? 5,000. If Janice goes out and gets 5,000 and she tied this up as a kind of standard sandwich, this payday 2 difference of $2,000 is Janice. That's the big difference here. He's not getting all of that in a sandwich. In a sandwich, is he still depreciating this property if it's an investment, which it is? Yes, he's untitled. I mean, we could do the same deal sub 2. Everything would shift again. But in a sandwich, Janice gets this for a payday 2. For Janice's payday 1, should get all of the down payment, that $200 to $300. We're not giving. I don't think I've ever given a seller a dime in a sandwich lease or any other deal unless it was we're buying it as a small down. Not sure where to get started? Go to smartrealestatecoach.com/get going for free books, strategy calls, and a whole bunch more. We're going to help you get going the wicked smart way. We've been after this for over a decade doing exactly that. More detail on that? Does that help just for the general difference?
Yeah. No, that's good.
So you'd say, you give it to us. I said, look, I control the whole thing here. I got your back. We have to cash this out no matter what. On this one, you get more upside, but you're in touch with the tenant buyer. I'm here to help you, but it's your deal now. And if they default, you let me know. We'll come back and do another one, or maybe the market's better and you sell it conventionally at that time. That's a discussion I'd be having with the seller openly.
And that's a good way of what Chris just mentioned about not doing a down payment on or anything towards to the seller on a lease purchase. A good way to transition it from a lease purchase to a sub 2 or sub 2 owner finance is say, well, obviously we wouldn't put money down on something we don't own. You know, how important is that down payment to you? And then if they want the down payment, then it's going to be at sub 2.
It was on the call yesterday. Call you heard that I did with that realtor. They're pushing down, and I said, well, let's take the lease purchase off the table then, or however I said it, because we don't put, and you said, okay. So we went right back to owner financing.
I think the other important thing to let us know is in an AOs, we have to have some sort of equitable control of the property, right, before we can sign
$10.
Yeah, just right.
And the option agreement, that's why we do it, yeah. It's literally for your file in case you get called. They told the people, I remember yesterday, by the licensing authority.